If I had to start over tomorrow making $100,000 a year again, I built wealth way faster than I did the first time around. When I first started, I was $100,000 in debt. I owned nothing and I had no plan. I made so many mistakes. Since then, I've built seven-figure real estate and stock market portfolios. So what changed? I simply learned the order that money should move in. That's why in today's video, I'm going to walk you through exactly what I would do if I started over making $100,000 a year again. Now, these are the exact steps that took me from broken in debt to building real wealth. Step one, install rules immediately. The first thing I would do is install rules for my money immediately, because money without rules behave like kids without rules. Massive chaos. When I first started learning about money, I eventually adopted a system I now call the 10-10-10-70 rule. 10% of your income goes to savings, 10% to investing, 10% to giving, and you live off of 70%. Now, here's something most people don't know. When I started, I couldn't actually follow that rule. My income just wasn't enough. So my early versions actually looked more like 3-3-3-90 rule. 3% I would save, 3% invest, 3% I would give, and I had to live off of 90%. That was the best that I could actually do at the time, but the goal was always to grow into the 10-10-10-70 rule, because the key to wealth is not motivation. The key to wealth is structure. Rule number two, build an emergency fund. The second thing that I would do is build an emergency fund. And honestly, this was something that was really hard for me and that I struggled with. I would start doing it, then I would stop, then I would start again, then I would stop again, and there was just no consistency at all. But an emergency fund changes something incredibly important. It removes fear from your financial life. And when you have 3 to 6 months of expenses saved, you stop making decisions out of panic. Your emergency fund should cover 3 to 6 months of expenses, not income. Once that cushion exists, you can start building wealth from a place of stability instead of stress. Step number three, eliminate high interest debt. Now, the next thing that I would do is aggressively focus on eliminating high interest debt. Credit cards, personal loans, anything charging double digits interest, because bad debt absolutely crushes your ability to build wealth. If you're paying 18% interest on credit cards while hoping to earn 10% in investments, you're financially moving backwards. When I started paying off $100,000 of debt early in my journey, everything changed. Because instead of money consistently leaving my life, I finally had cash flow available to start investing into assets. And cash flow is the fuel that drives wealth. The goal is to have things and people paying you 10, 20, 30% instead of the other way around. Step four, start automatic investing. Now, once the debt is under control, I would immediately start automatic investing, not occasionally, not when I felt like it, no, literally automatically, meaning every month there's a non-negotiable amount that's being invested. Maybe it's $1,000 a month, maybe $1,500, maybe $2,000, but it happened no matter what. No excuses, not when I can get to it, not next month when I have a little bit more, every single month. And I would completely change the order of operations compared to how I used to manage money. Now, my old cadence looked like this: make money, pay bills, expand lifestyle, try to save, try to invest, which meant investing rarely happened. Today, my cadence actually looks like this: make money, save first, invest second, pay bills, lifestyle last. That simple shift has changed everything. Step five, increase investing as income grows. As income grows, investing should increase before your lifestyle does. Most people get a raise and immediately upgrade their lifestyle. They buy better cars, bigger houses, more expensive habits. But early in my career, I may have been making $3,000 a month, $5,000 a month, maybe $8,000. And one of my beliefs was always this: if you're making the same income in year 5 than you were in year 1, something is wrong. Your ability to create value should increase dramatically. In 5 years, your income should double or triple. But when that income does start to increase, you want to keep your lifestyle the same. Your asset building machine should expand first while your lifestyle remains the same as it was. Step number 6, buy assets that produce income. So the next step is I would focus on buying assets that produce income. A lot of people think that means real estate, and real estate definitely is one of them, but income producing assets also include dividend stocks, dividend ETFs, private lending, structured note, owning businesses, taking equity in companies. The key word here is cash flow. Cash flow means that your assets are paying you consistently, not just hoping that they go up in price. When assets produce cash flow, you begin building real financial freedom. Step number 7, expand into private investments. Now, once the foundation is strong, you can start expanding into private investments. Private deals offer something extremely powerful: ownership, equity, cash flow, appreciation. You're not just earning returns, you're actually participating on the upside of the asset. Your net worth grows as the asset grows. So when I look at private investments, I'm looking for 3 things. Number 1, cash flow, ownership, and appreciation potential. Those 3 things together can accelerate wealth dramatically. Step 8, speculative investments. Now, these are going to be investments that I would start looking at, and these are going to be things like crypto, maybe startup investing, angel investing, venture deals. This is actually where ultra wealthy people sometimes make massive returns, but it's also where people lose a lot of money. And the mistake many people make is trying to start here first. Now, speculation should be the smallest part of your portfolio. Once you've actually built some wealth, you can start to afford to take bigger risks. That's why shows like Shark Tank exists, because those investors built wealth first, then they started investing into startups. Step 9, build a legacy fund. Once wealth is growing, the next step that I would start thinking about is legacy. Because wealth isn't just about what you accumulate, it's about what you leave behind as well. One of the things that my family has done is create scholarship funds, education scholarships, academic scholarships, athletic scholarships, helping young people have access to opportunities they may not otherwise have. When you reach a certain point financially, giving becomes one of the most meaningful parts of the journey, because money could stop just being about you and it starts becoming about impact. Step 10, protect the wealth. One of the most crucial steps that I would start taking is protection, because building wealth without protection, I've learned, is incredibly risky. So this includes things like estate planning, trust, insurance, asset protection strategies. You want your wealth to outlive you. You want it to benefit your children, your grandchildren, your family. There's a great passage in the Bible that says a good man is one that leaves an inheritance for his children's children. So this is where legacy planning becomes incredibly important. Step 11, join the right community. This is the last step, but honestly, it could have been the first step, because this is one of the most powerful accelerators of wealth. If I was starting over at 100,000 again, then one of the first things I would do is surround myself with people who are already where I want to go. So people moving from 6 figures to 7 figures, mentors who understand the journey, a community that elevates your thinking, because proximity really does matter. When you're around people building wealth, your standards rise, your vision expands, and your results are going to tend to follow. Okay, so quick recap. If I had to start over making $100,000 a year again, here's the exact order that I would follow. I'd install financial rules first. I'd build an emergency fund. I would eliminate high interest debt. I would start automatic investing, increase investing as my income grew. I would buy income producing assets, then expand into private investments, then speculative investments. Then I would build a legacy fund. I would make sure to protect my wealth, and I would join the right communities. And when you follow a structure like this, building wealth literally becomes less confusing and inevitable, because instead of trying to do everything at once, you simply just follow the next step. And if you've enjoyed this video, then watch this next one. If you haven't yet, click that little subscribe button and join the channel family here. Let me know what questions you have that I can answer on future videos. And until the next time, say it with me: no lazy money.